All right, thanks for sticking around for part 2 of our All About Interest Rate series. Let's check out this primary suite with a hidden sitting area, and then we'll dive right in. All right, so in part 2, we wanted to talk about some of the common mortgage products that we hear about, like a 2-1 or a 3-2-1 rate buy down. There's a lot of variations to these concepts, but the general theme is that they help ease you into the interest rate payment over time, and the rate buy downs are temporary. In the case of a 2-1 buy down, the rate is decreased 2% in the first year and 1% in the second year, hence 2-1. In the third year, the rate goes back to the current market rate, allowing you to slowly adjust to the monthly payment. Builders will commonly use this strategy when you can afford the full payment, but as an incentive to help make the deal feel a little bit better. These are also commonly used if there's an inventory home or a finished, completed home, and there's already a price reduction in place on that house. In most situations, these rate buy downs will not cost the buyer any money, as the builder covers these fees as part of the incentive package. So let's take a look at this in a little bit more detail, keeping in mind that all these numbers are just for discussion. Let's say current interest rates for a 30-year mortgage are at 6.8%. In the situation of a 2-1 buy down, the first year rate is 4.8% and the second year rate is 5.8%. That 2% the first year, 1% the second year. In terms of monthly payment on a $450,000 home with 5% down, your normal monthly payment, just principal and interest, would be roughly $2,787. But because the rate was brought down, your first year payment would be $2,243 on the 4.8% interest rate. In year 2, your payment would be $2,508 at the 5.8% interest rate. And then in year 3, it would go back to the full market price of $2,787 for the remainder of the 30-year mortgage. The 2-1 buy down does a great job as a temporary buy down. But the big trick on a temporary buy down is you still have to be able to afford the full payment of the loan. That's a big difference. So the question to ask when shopping any new deal is if you're getting the buy down for the full 30-year term or just for 3 years or 2 years or even 1 year. So that's the temporary rate buy down. Let's stay tuned for part 3 and we'll talk about some fixed rate options.